Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is October 4th, 2023. Happy birthday, Mom. 88 years old today. Wish my mom a happy birthday. This is the Kickstart video where I take a look at the Euro versus US dollar, the dollar versus yen, and the sterling versus US dollar to kickstart your Forex day in the North American session. So let's get started. We'll start with the Euro versus US dollar, and I'm looking at the hourly chart here. And in trading over the last few days, we've seen a move down. Yesterday we moved down as well, 3 days in a row to the downside. But today, the price is seeing a rebound back to the upside. We did just get ADP employment report coming in weaker than expected at plus 89,000 versus 153 expected. We have the BLS jobs report coming out on Friday with expectations somewhere around 170-ish type, which is a little bit lower than last month. Of course, we had the JOLTS job openings yesterday, which shocked the market. Much higher than expectations, and that sent the yields higher, with the 30-year bond actually moving above 5% before moving back to the downside. It currently trades at 4.88%. The 10-year yield went up to 4.88%. It's currently at 4.76%. So coming off a little bit from their boil in yields is helping to weaken the U.S. dollar. And we are seeing that rebound back to the upside in the Euro versus US dollar as a result. And looking at this hourly chart, just focusing on it, the 100-hour moving average is, of course, being tested, or was tested at 1.05240, currently trading at 1.05088. So willing sellers were leaning against that level on the spike higher after the employment report. That is what we tend to look for. So sellers up here have an option now. They can either hope that the price rotates back to the downside, maybe getting below the swing area right through here, where we had a different swing lows through here, forming a floor before we made that area a swing high level or a ceiling here before breaking to the upside here and trading here today and finding support against that level, moving higher. So this area right through here between 1.0483 and 1.0496 is going to be our level that we're going to be watching going forward today. Let's call this support. Let's call this resistance. And the battle is on between the buyers and sellers. We'll see which one wins. But the dip buyers in trading here yesterday, ironically, or not against the old trend line right here, the underside of the old trend line. We found buyers against the lows right here and again here. In trading here today, we couldn't quite get below the low price from yesterday, and that gave the buyers a go ahead to push higher. So dip buyers here got above this swing area target, but are thwarted against the 100-hour moving average, and that's going to be the battle in trading here today. So we'll see how it all plays out, but support down here, resistance up there. Let's take a look at the dollar versus yen next. And yesterday, after the JOLTS job openings, the dollar yen moved above the 150 level right through here, moved up to a high of 150.154. And I guess the market got scared, and in thinking of that there may be intervention, and the price quickly moved sharply to the downside, moving all the way down here. It doesn't even look like it went all the way down there, but it did 147.31 in a matter of seconds, and that price tested this low going back to here, ironically. Maybe not, but dip buyers quickly snapped up the price at 147.31, and the price quickly moved back up toward this area up here, which was defined by our last lows through here, 2 lows right there, and then we had a ceiling here developed in trading yesterday, and again today. We saw sellers here, buyers here, and sellers again here. And so the price moved lower. And where do we move down to? Well, we moved down to the 50% midpoint of the move up from this low right here to this high right here. And that 50%, of course, pretty much corresponds with this move as well to the downside. So there's a couple of reasons why 50% is key. 148.73, and that's where the low price in trading here today bottomed, and it was also near the low price right here as well. So we have two bottoms right there, and we are starting to see it move a little bit, move back to the upside here after the ADP report. Technically, I got to say that the 200-hour moving average will be our barometer on the top side. If you want to be more conservative, this area right here would be a barometer, and this would be also a resistance level for the dollar versus yen. If you think the dollar has reached its peak above the 150 level, if you're scared about intervention, if you think that it's just a correction is in order. So watch these levels on the top side, 1, 2, 3. On the downside, we need to get below the 50% retracement at 148.73 to prove that the sellers have more action left in them in this currency pair. So those are my technical levels for the dollar versus yen. Finally, the sterling versus US dollar. We reached another low here in trading here today at 120.36. Taking a look at the daily chart, that took the price a little bit further away from the 38.2% retracement of the move up from this low right here, going back to September 2022 to the high price that we saw in the month of July. That was the hope for the sellers to stay below that 38.2% retracement. We reached it. We got through it. Can we stay below it? Becomes the next question, and we couldn't. So let's see what happened at the 120.76 level. If I go back to the hourly chart, this is the 76 level, and you can see the price traded above and below it really yesterday and today. So the market was kind of unsure about what it wanted to do near that 38.2% retracement. Finally, the dip buyers the sellers turned the buyers right through here. That move to the upside has since now broken above the 100-hour moving average, but stayed below the 200-hour moving average right through here. So we are more toward the neutral area here with those two moving averages coming in play between 1.2147 and 1.2168. It's going to take a move above the 200-hour moving average and staying above that 200-hour moving average to keep the buyers happy in the sterling versus US dollar. Recall from I guess this is last Friday, the price did move above the 200-hour moving average for the first time, going all the way back in time. You have to go all the way back to this day right here, which is September 1? Yep, September 1. So the whole month of September took till the last day for the price to get above the 200-hour moving average and couldn't stay above that level. So getting above the 200-hour moving average is key for the sterling versus US dollar if the price is going in that direction, okay? Absent that, and the sellers remain still in more control against that 200-hour moving average. Watch the 100-hour moving average, currently trading right at it right now. If we move below that level, we could see a rotation back toward the 121.10 level, where we will watch that level as support. It was the low price from last week's trading, so pay attention to that 121.10 on the downside. You can see how it was resistance here, broke above it, and then came back down to it and found support. Also the 120.76 level, that's a 38.2% retracement again on the daily chart. So there you have it, a look at some of the major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.